Hello traders, welcome back to hm Trading channel. Today we're going to talk about Fibonacci level and how Fibonacci retracement can help you in trading. First of all, using Fibonacci helps to find out these few factors right here, which is the daily bias, the daily trend, target levels, and pivot point potentially on the daily or the higher time frame point of view, finding out support or resistance level to actually help us in trading. So let's jump into the chart real quick right here. And this is a trading view chart. On the left side, we can see these particular sections about all about Fibonacci retracement. We have Fib channel, Fib time zone, Fib circles, Fib spiral, all different kinds of Fibonacci. But I'm using the classic one, which is the Fibonacci retracement right here. So you can just basically pull it out from the high to low or the low to high. That I'll explain how to actually use it later. But first of all, this is the setting that I'm using right here. After double click, you can see it. You can actually use this as well, but some of the settings might be different and it might be different from the default, and I'm changing it into clearer point of view, and it's just gonna be black and white, so it's not the default setting is gonna be rainbow settings, too colorful. So right here we are looking at the black and white setting with the numbers that I have right here. All right, so that is uptrend, and basically that is downtrend. So the purpose of me using the Fibonacci lever, all right, to assist me in looking at the daily point of view, assist me in trading, is to measure out the retracement of a trend. So we need to understand that price will not keep going up one way without coming down, and basically price will not go down without coming back up with some of the retracement. So with the help of Fibonacci retracement, we are trying to measure out the retracement of an uptrend or a retracement of a downtrend. So let's look at how we're gonna measure out the uptrend right here. So from the uptrend, we are looking at from the low to the high, all right? Because the uptrend go from the low to the high, as simple as that. So we need to pull from the bottom to the top. On the other hand, to measure out the downtrend retracement, then we need to measure from the top to the bottom. Right here, where we measured out the retracement to the upside of a downtrend. Now, let's apply this to the chart. And I always use the Fibonacci on a higher time frame. It can be daily time frame, weekly time frame, or 4-hour time frame. And I personally don't use it on the lower time frame, as it's gonna be a lot of confusion and there's gonna be a lot of uptrend, downtrends happening in the lower time frame. So the purpose of me using Fibonacci retracement, as I mentioned earlier on, is to find out the daily bias or daily trend. So I'm using on the higher time frame. So right here we can see the uptrend that we have, which is this low to the high. All right, so this is particular uptrend that we're seeing that's retracing downwards. On the other hand, let's say we are looking from this particular high to this particular low. This is a downtrend that we're trying to measure the retracement to the upside right here, which we can see where is the retracement. So basically, this is how simple it is when I'm applying this to the chart, and I'm gonna be using it from the wick of the high to the wick of the low for a downtrend. It same goes to when I'm measuring an uptrend, I'm gonna use it from wick to wick. Now let's talk about what all these levels about right here and how it can help us to find out the daily bias, the support levels, and the target level or pivot point, etc, etc. So basically, this is an uptrend that we are going up, and price, let's say it make a huge rejections on top right here, and we are measuring the wick, and it started to retrace to the downside. So how can we know that the retracement actually started from a trend and is actually from an uptrend and it turning to the downside for a retracement? So the first 0.236 is gonna be the first level of retracement. So we are expecting when price is actually breaking off the low of the first level, price is potentially starting to retrace. An uptrend is potentially retracing downwards or turning into a downtrend. This level right here, we're gonna see it as first level of retracement. chance when price actually break the lows and coming to retest 0.236, and if any other confluence on the fundamentals, right, on the price section's point of view is going for bearish, then price could potentially retest 0.236 for the continuation to the downside. Next level we are looking at is 0.382 feet level, and this can be considered a weak level to break through. So this can be seen that it's not a strong support, right, when price trying to come down, and it can be easily breaking through when the momentum is bearish, or basically the fundamental is bearish as well, and price can continue dropping lower from there. Next up, we are looking at 0.5 level, where this is starting to be a strong level right here. It can potentially form a support right here and continue to go up, continue the bullish trend depending on other confluence. One thing about Fibonacci is helping us to find out the daily bias and trend, but we also need to look at the other confluence at the end of the day. So this is the 0.5 feet level. When we are looking at 0.618 feet level, this is where everyone saying that this is the golden Fibonacci level. Whenever price actually tap 0.618, most of the time that will be a rejections coming in, all right, or price will actually make another movement back up instead of price continue dropping, because this is a very strong level, and this is called golden Fibonacci level on the 0.618 feet level. And coming in, if let's say price come all the way to the downside, all right, and we have another weak level right here, which is 0.618. So when an uptrend actually goes all the way up and come all the way down, breaking the 0.618, so-called the golden level of Fibonacci, and that point of time, that particular trend might actually turning into a bearish trend in the bigger pictures, right? If we talk about this particular uptrend, right, it's trying to break the low of its original wick of the low, the original low of the trend, right, of the uptrend, then basically, the price can break the market structures and basically turn bearish in the bigger pictures. So this is what we see as a 0.786 feet level. It's not a strong support to looking for when price coming down, and high chance it can be going all the way down, right, turning the market structures into a bearish market structures. And lastly, if we talk about the low and the high, this is basically the high and the low of the trend, where this is the low of the uptrend and this is the high of the uptrend. Before this, we are looking at uptrend, so we're just gonna be simply going through a downtrend, all right, which we're gonna look at the same level in a faster pace. All right, so let's say when a downtrend, we always gonna measure from the high to the low. If let's say we are measuring a downtrend, same scenario again, it's just the other way around. When a downtrend, we are looking right here is coming up to 0.236 feet level. This is where the retracement started up, and price may come to retest this 0.236 for the continuation to the upside of the retracement to the upside of this particular downtrend. So when we go, we have the same 0.382 as a weak level. All right, we have 0.5 as the strong level, we have 0.618 as the golden level of Fibonacci, and 0.786 as a weak Fib level, and we have the high of the trend. All right, we have the base point right here, the level right here indicating the strength of the particular level. When we have the 0.236 start of retracement, 0.382 weak level, 0.5 strong level, 0.618 golden level, 0.786 weak level, and 0 and 1 is just basically the starting point and the ending point of the particular trend that we are measuring. So let's see how we can really apply it on the chart with, let's say let's see how we can actually apply on a chart and how we're gonna take a trade if we are gonna be using Fibonacci as an assistant right here. So let's measure out this particular high of the particular low of this particular downtrend. So when this particular downtrend that is starting to retrace and we see it broke above 0.236, now 0.382 is a weak level, and when it comes to 0.5 feet level, we do have a structures right here, but the price is not really rejecting from the daily point of view. So when it tapped 0.618 Fib level, one thing we have to remember, right? Not most of the time price will actually tap into the level, and that's where it actually exactly go down. It won't be happening like that, but most of the time, let's say price gonna make a rejections, and we can switch into smaller time frame like the 4 hour time frame or even the 1 hour time frame. We can see that price starting to make a bearish formations right here, and we have the 0.618 Fib level. That's where we can basically see that from this particular uptrend that it retracing upwards, testing 0.618 and continue going down, make a rejections. So same goes when price come to 0.5, we can see a minor reactions right here as well, and price is actually acting as a support right here on the 0.5 Fib level. So let's say we are looking for a trade right here. That's where we can base on this particular key level that is determined by the Fibonacci level and go into the smaller time frame to look for confirmation. Of course, and at this video, we are not going to be looking so much into the confirmations. Let's say when a downtrend that is coming to the upside, all right, and then go down. So 0.5 supposed to be a resistance right here, right, when we are looking at downtrend retracing upwards. Then when it comes to the price coming back to the key level or Fib level, after breaking it, it can also turn from resistance to support, or otherwise support turn into resistance. Now, when we see this particular price coming down, on the other point of view, all right, we can also use Fibonacci retracement to measure the retracement downside later on. So let's say when we look at on the previous particular setup, we're seeing retracement to the upside. So now we are seeing this back as an uptrend, right? And when it's come all the way down, there we go. We have see a perfect rejections on 0.618 Fib level, and we have 0.5 Fib level right here. So on the smaller time frame, when we see these kind of rejections, that's where we can see that price can be actually potentially rejecting the 0.618 golden Fib level and continue to goes up. And from there, we can look for potential setup right here on the lower time frame and putting up the stop loss below the key level right here, right, for the risk management plan. Actually see the target level as 0.5 Fib level, or if looking at bigger reward, we can see the next level at 0.382. So etc, etc. There's many other ways on using this Fibonacci retracement, and also there's many other tools on Fibonacci retracement, and there's no exact right or wrong. That's just basically how I use Fibonacci level to help me in tradings. And I hope this video give you guys some understanding, and we'll see you guys on the next video.